How can I start investing in real estate? To begin investing in real estates, of course, you will need to have seed capital to start investing in this sector. The amount of money you need to fund such a purchase depends on the price of property you are intending to buy. Surely you don't have to pay the whole amount of money in front, but you'll need to make the down payment and you can mortgage the rest. However, you should understand that you need to pay the whole debt before you can realize the anticipated profit in your investment. You can earn the capital gains in your real estate investment when you sell the property for a higher price than the one that you purchased it with. All systems have outstanding liens which are known as mortgage loans. In this case, your capital gains on investment could be translated as the difference between the selling price and the outstanding liens that still have not been paid. It's worth noting that you need to pay attention to your tax liabilities on any capital gains that you may achieve. How can you get the best out of your investment? Before you make the purchase of your real estate property, make sure to do your homework by finding out whether this property is worth your investment or not. Make sure not to rush into something that you may regret in the future. Ask yourself and find out answers to some of the following questions. 1. What is the crime rate in the area where you intend to purchase the real estate property? 2. How much money is expected to be spent on the renovation? 3. What is the average selling price of similar homes in the same area? 4. What is your anticipated gain on such real estate investment? 5. Is it worth your investment of money and time? 6. If you can't sell the property right away, do you think you will be able to easily find a tenant to rent it? 7. What is the average rent for similar real estate properties in the area? 8. How good is the neighborhood? Is it desirable? If so, who is it desirable by? By young generation, or by the older ones? By singles or by couples? 9. Are there any amenities, parks, grocery stores, schools, hospitals, or even recreation centers close to the neighborhood? Now that you are in this business, you should realize that you can have different options to get the best out of your investment. Flip the property. This is the most well-recognized way where you can maximize your profit in your real estate investment. You can do so by minimizing your expenditure. This is where how to do it yourself comes. Of course, you might need a handyman that can help you out in doing some of the work, but you should do most of the work yourself as much as you can. The keyword in flipping real estate property is to minimize your spendings as much as you can. This is why the do-it-yourself tactic can achieve just that. Renovation is guaranteed to increase the value of your property. Remember that most of the properties you can find in the market that are affordable and cheap are the ones that need to be fixed, renovated, and brought back to life. The second approach to get the best out of your investment is buying and holding. You might want to consider purchasing a rental real estate property. One good thing about purchasing a rental real estate property is that they are usually sold with tenants already occupying them. This enables you to benefit immediately from the cash flow generated through the agreed upon rent. This way, the tenants will help in taking the burden off your shoulders by contributing to the payments of the property's mortgage so that you can make the payments on time. The third approach to get the best out of your investment is buy a property, occupy a unit in it, and rent the remaining. Normal loan programs allow you to buy multi-unit properties. When you apply for a loan and you mention that you are planning to occupy a unit in the property, the loan will be categorized in the owner-occupied type of loan category. But if you are not going to occupy the property or one of its units, then the loan will be considered as an investment loan, which is harder to obtain more than the owner-occupied mortgage loan. Provided that you meet all other terms and conditions required to obtain the loan, you will be qualified to obtain a loan to occupy and invest in a real estate property made of more than one unit. If you are currently a tenant, then this would be good news for you because you can now buy a property, occupy part of it, and rent the other. Again, this is relatively similar to the buying and holding approach where both you and the tenant will help in covering the mortgage, insurance, taxes, and maintenance. The leftover money is what you can call it your cash flow. After you have covered a sufficient number of payments of your own mortgage, you will be able to purchase another property that you may consider buying. The time you spend in the first real estate property is in your favor. Because you occupied part or unit in it and both you and the tenant or tenants paid the rent, you generated cash flow and you also covered the mortgage payments on time. In addition to that, you found the time to search for another good real estate opportunity that you may consider buying. Checklist of things to do in order to buy your first real estate property. Get your down payment ready. If you are planning to apply for an investment loan, then you should be aware that you will be required to provide sufficient down payment to offset the accompanying risk of a possible default on such a loan. This is mainly because lenders consider investment loans as riskier than residence property loans, where you might be stretching the limits of your financial capabilities beyond your reach and ability. And this is where you might default on the loan. Loan programs are not the same, but you should consider having at least 20%, if not more, for the down payment. However, if you decided to occupy a unit of real estate property you are intending to purchase, then you might be able to load down your down payment where the loan will be considered as an owner-occupied property, as I mentioned before. Clear your credit history. Obtaining a loan will not happen until your credit history has been checked and your credit score is exactly 680, if not more. The lenders need to make sure that they are giving the money to a trustworthy person who can make the mortgage payments on time without defaulting, and in order for them to make sure of such requirements, they will be checking your credit history. It is imperative for you to check your outstanding credit and compare it against your credit lines. Also, you must address any issue related to late payments. In addition, if your credit balance is over 30% of your credit, then you will need to pay it as fast as you can to increase your credit score and boost it up to the acceptable level by the lenders. Any collection and your credit report must be cleared by arranging with creditors to make the required payments on time. If you can pay them in full, then go ahead and do it right away. Do your homework research. If you don't do full and extensive research, then you might end up with a real estate property that you cannot rent or sell. Answer to all the questions that we have mentioned before in this video in relation to the property you intend to purchase. You might also want to consider working with a licensed real estate agent specialized in the area that you located the real estate property in, to clear any ambiguity or uncertainty. Make a decision on how you will manage the property. If you are planning to rent the real estate property you're about purchase, then you might want to ask yourself whether you'll manage it yourself or you'll hire a managing company to do that for you. Of course, you realize that you will be spending more money if you decide to hire a managing company or person to take care of the property for you, but you'll have peace of mind realizing that your property is under the management of a professional who knows the ins and outs in relation to the management of real estate properties. Your other alternative is to save money and manage the property yourself, but if you do so, you have to remember that you will need to do all the related work yourself, including collecting rent, doing communications with tenants, including answering and arranging to address requests of repairs or necessary maintenance and inquiries. You'll also be covering issues related to late payments and legalities. So be honest with yourself. Are you the type of person who can handle such issues? If so, do you have the time to perform these tasks? Establish a list of specialists contacting info. If you are planning to start your real estate business, then you should realize that professional real estate owners should always have a handy list containing the contacting info of price competitive specialists, including handyman, plumbers, painters, electricians, appraisers, and real estate agencies. Find fix and flip real estate specialist. A fix and flip real estate specialist or agency can help you out in finding opportunities in short sale or foreclosures. In the field of flipping real estate properties, purchasing cheap properties that need fixing and renovation is the main idea, so make sure not to buy something that's overpriced. You will need to do your calculations and estimation of how much money will be spending on the property and the profit you are anticipating to make from such an investment. So, when working with a real estate specialist in this type of investments and taking in consideration the opinion of the professionals found in the list that you've established of specialists contacting info. Where to get the money to invest in real estate? If you already own your residence, then you might want to consider using your home equity as a down payment on a new property that you are interested in purchasing as a new real estate investment. This investment could be a multi-units real estate property, where you can occupy a unit and rent the rest. The generated cash flow can be used to cover the mortgage payments and other related expenses. Regardless of the fact that you may already own real estate property or not, you can always communicate with mortgaging companies to find out about the different options you may have in accordance with your financial status, credit score, already available funds, and the down payment that you are willing to make. One more factor that you need to consider before making your real estate investment is the timing. So, after evaluating all different contributing factors, you should ask yourself, is this the right time to invest in real estate? There is no such as 100% safe investment. What could work for someone doesn't necessarily mean that it could work for you too. So, you should ask yourself if you can financially bear and are ready to incur any losses from such an investment. Remember that you always need to measure how deep the water is before you decide to dive in it. I wish you success in all of your investments, and I look forward to positively contributing to your investments decisions. Thank you for your invested time with us. Please like the video if you find it useful. And subscribe to this channel. investingM channel.